Hi everybody, my name is Kia and I'm from Car Bookkeeping Specialist, and today I'm going to show you how to use your very own sales forecast spreadsheet. If you don't have a sales forecast, drop me an email, ask for sales forecast, and I will get you this one sent straight to you as soon as possible. And then I just want you to follow along with me and fill it out so that it can suit your business. In the next video, we're going to look at analyzing the results of the sales forecast because it will be too long to look at both of them together. And then after that, I will also show you how to create your very own. So if you remember, when we're doing a sales forecast, we're looking at short-term and long-term analysis. So the short-term is usually done monthly and you're looking over a period of 12 months, and the long-term will be done for yearly, and I've gone up to 5 years here, but some sales forecasts can go up to 10 or even 20 years. They do just become less accurate, and there's not really much point in doing one for that long. So just stick with 5 years and you're fine. Now, the sales forecast is split into three key areas. We've got the sales units, so that's the volume, how many items we're selling of our product or service in each period. Then we've got the revenue, which is how much money, how much income we're generating from those sales, and the direct cost section, which is what's it cost us to sell those elements. Let's look at how you're going to use this spreadsheet for yourself. Here in the B column, we've got the product or service. Now, you only need to put your product in one of these lines here and it will automatically change for you. Let's say hand gel, and it changes all the relevant ones that you need. Let's put that back to soap bar for now. You can just go ahead and retype over those. Once you've typed in your product or services, you're then going to type in the cost, the price, what you're selling each product or service for, and just type that in over the top there. And then last but not least, in this big quantity section here in the light green section, you're going to type in how many units you're selling. So in January, I sold 1 unit of soap, in February, 1 again, in March, 2, in April, 5, and so on, month by month. As I said, with the cash flow forecast, go along the months for each product. How many units of soap bar you're selling each month, how many units of hand cream, luxury basket, mini spa, luxury spa, and go horizontally across the table. It's much easier that way. At the bottom here, we've got the total, which is just a basic sum formula, which adds up the total number of units that I've sold. Now, if you've got vastly different products or services that you're selling, this total is not really much use to you. It's really unnecessary, you don't even need it. But if you've got units that are very similar and there's only small changes, like if you're selling cakes, for example, and generally the cost of those are the same, and maybe you're changing the icing or the designs or something like that, small changes, then it's useful. Okay, so it might be useful for you and it might not be useful for you. It's up to you if you choose to keep that there or not. And along this side here, we've got, let's move that across for you, the total, the annual total, how many units we've sold in the year of the soap bar, of the hand cream, and of the mini spas. So you've got your annual total, you've got your monthly totals there. The next section is revenue forecast. This is automatically calculated for you. Once you've put your price here, the unit price of each item, and then you've put how many units you've sold, it automatically calculates what the income is, what the revenue is from those sales each month per product. And then again, we've got the sum, so how much total income in the month and how much total income in the year for each product or service, and the complete total income for the whole year from all of them. You don't need to do anything in this section. You only need to complete these two sections here, the price, the quantity, and list whatever the name of your product or service is. The final section is direct costs. We're going to look at that in a little bit more detail because it's a little bit complex. And it's really important that you start to understand these features of your financial analysis tools as soon as possible. So this is all automatically calculated as well. And this is just telling you what does it cost you to sell each item. So to sell 1 soap bar, it cost me £2. In this month, I spent £19 selling my soap bars and my hand cream, and this is how much it cost me in December to sell all of the items that I sold in December. Let's look at the workings for cost of goods sold. This is another section that you do need to complete. So as I said before, the names of your products and service will automatically fill out in this section from what you put in the earlier section. When we're looking at our direct costs for the units that we're selling, we can generally break them down into these 3 key areas: materials, labor, and expenses. Now, if you're a product-based business, it's really easy to analyze and assess what is the material element of the product. If you're a service-based business, it's a lot easier to analyze the labor element of your business. But in general, whatever you're selling, be it product or service, you will be able to find direct elements of the unit of what you're selling can fit into one of these three categories: materials, labor, or expenses. Let's take the example of the soap bar. The soap bar, I'm buying a bar of soap from somebody who's already made it for me. I need to buy the packaging and I need to buy some lavender oil to scent it. The soap, the lavender oil, and the packaging are three elements, material elements of that product that come together, cost me £2 per unit, and then I sell it on for £5.99. So that's purely material cost. That's all that's involved there. If we look at the luxury basket, the material element of that is the basket itself, the products that I have to put in the basket. There's a labor element because I pay somebody to put the basket together. That's their whole job is to just put the baskets together so they're ready to be sold. And there's an expense element. Because, for this is not a very good example, but say I produce a leaflet that goes in with each basket and that costs me £1.50, maybe something along those lines. Let's look at the service side of things, the luxury spa. So this is essentially, I'm giving you a posh little massage, and so the labor element's really easy to figure out. £10 per hour for somebody to massage my clients. I charge myself, maybe I do the massage and I charge myself. It's £10 an hour, my labor cost. So that massage, that 1 hour massage, is £10 in labor. The material element of a service business, well, even if you don't have direct materials, if you don't use one product, you don't buy one product and use that one product in your service, you may buy, in this case, a big pot of massage oil. And if I buy a large pot of massage oil that costs me £100, but I can use that 10 on 10 different clients, then each client's material cost is £10. I hope that makes sense to you. And then we've got expenses. An expense, for example, if I take the payment for the spa through the card and the card machine charges me for each payment, then I can pass that cost on. That's an expense, for example, in this business that I've created. You will know what your elements are for your own business and your own product. So break it down into materials, something physical that is directly related to each product. Labor is obviously labor, the work, people, staff, salary costs, things like that. And expenses are like anything else that doesn't really fit into those two categories. And then we sum them up. So that's just a formula that's automatically calculates it for you. And then we work out the cost of good percentage. So what percentage of our sales, of our revenue, is taken up by the cost of having to sell that product. Now, I did add the gross profit section here because people do ask for it, but it's not common to have the gross profit section in a sales forecast spreadsheet. I've only added it here because it has been requested, but really when we go on to look at profit forecast and profit margin analysis tools, we'll basically be duplicating this information in this section here. So you don't really need it, but some of you want it. So if you want it, it's there for you. Essentially what this is revenue minus cost of goods sold, and that gives you your gross profit. That's the very beginning of your P&L. We're going to go and look at these visual tools in a little bit more detail in the next video, because that forms part of our analysis. We want to know how to analyze the results and the data that's coming out of these forecasting tools for us. So we'll go into those a bit more later on. And so that is your short term, okay? Let's look at the long term spreadsheet. Flip over to the next page. Now we've got year 1, year 2, year 3, year 4, and year 5. And year 1, the data gets pulled directly from the previous spreadsheet. So all of the total figures from the previous short-term spreadsheet, the total of 12 months, gets pulled over here. You don't need to do very much this spreadsheet at all. What you will be doing is manipulating these percentage categories here in this first section, in this sales unit forecast section. So you would know from your market research, from your personal marketing activities, from your customer analysis, from your industry trends, what the movement percentage is for whatever it is you're selling, your product or your service that you're selling. In the soap industry, there is a 10% increase in sales year on year. That's what my industry data told me, completely made up. So I'm going to put 10% here, and the spreadsheet's going to automatically calculate for me what the increase in my sales volume is based on that percentage, that based on that ratio. You may also have a trend in your industry that is a reduction, a negative. Maybe our mini spas are not doing so well year on year, and there's a reduction of 3% on sales, and I'm going to use that to factor into my forecast. I'm aware of fluctuations in the industry. Or you might have a product that's doing really well. Sometimes the movement's not going to be the same year on year, particularly when you get past the 2-year mark. Then when you go and revisit your analysis and your ratios, your financial ratios for your industry, you might see some big differences. And if that's the case, when you get to that stage, you'll just change it. Just type the new percentage in there and it automatically updates for you. From the data in this section, sales unit forecast section, it again automatically calculates the revenue. So you can see what your anticipated annual revenue is year on year for the next 5 years, and you can see in 5 years what's the total income I'm anticipating to make from all of these products, and then the overall income down there, or revenue down there. And then once again, we've got some more analysis tools here, which we're going to look at a little bit more in the next video. So there is so much to go through here. Once again, if you do want this spreadsheet for yourself, please just drop me an email, call it sales forecast, and I'll get this sent over to you as soon as possible. Thank you so much for watching. I hope you found it useful. We've got so much more to talk about with regards to the sales forecast, so I hope to see you next time. Please remember to drop me a comment, like, share, or subscribe, and thank you so much for watching. Bye.